Intel's down 10% in 2 days. Santa Claus rally being derailed right before our eyes here or not?
I don't think derailed, but I don't know that this is a year where we really should look at a Santa Claus rally as the only thing to take us through the end of the year. Now, we have to look at this in two different time frames. The next 60 days, probably going to be a little bit tough. So does that mean we don't have a big Santa Claus rally? Perhaps. But seasonally, Santa Claus rallies are usually pretty strong and difficult to trade out of. If we look into 2021, now, one of the ways to look at this kind of glass half full about the UK is that all it does is create more pent-up demand that can be unleashed towards the end of the first quarter, beginning of the second quarter, as long as this vaccine is still effective. So I would look at these mini pullbacks as buying opportunities.
All right, Joe, you got a new variant of the virus found in Europe, right? We're focused on that today. You've got the lockdowns in the UK, travel bans around Europe and other places. You still have this debate as to whether the market needs a rest, whether it's about to pick up steam. Tom Lee today says, I'm quoting here, I think there's still a lot of gas left in the tank for a year-end rally. That is versus Oppenheimer today, which says we see stocks at current levels vulnerable. What do you think?
So it's interesting. I think everyone's focusing on, well, what is going to happen here for the next 10 days? And I think the important thing is to focus on, well, what's going to happen here over the coming quarter? What type of opportunity is going to be provided? And I think overall, you have to look at any dips in the market, I agree with Liz, as an opportunity if there is a correction, in fact. And I think today it gives evidence to that, Scott. You have a tape today that is trying to understand this new variant of the virus. It's also trying to digest a significant S&P 500 rebalance, but yet there is no flight to safety today. The 10-year Treasury, that's actually selling off. We came in early this morning, it was 88 basis points, now up to about 93 basis points. When you're looking at what I call the still society high beta names, whether that's DocuSign, Peloton, or Zoom, they're higher on the day. When I look at risk assumption is still being accumulated today. Look at biotech. Biotech is very strong. So I think overall it's evidence that, yes, it's right to be concerned. It's right to have caution, but let's not step away from being allocated. I think ultimately the real question becomes, how exactly do we want to do that? And Scott, I've been emphasizing over the last couple of weeks, I don't want to go all in the cyclical-oriented economic recovery type of allocation. I don't want to own cruise ships. I don't want to own casinos. I don't want to own airlines. I want to stay higher up in quality, and I want to make sure that I still have some of my established growth names.
Yeah. All right. So, Court, how do you see it? Do we have room for a run, or are we going to go through some sort of consolidation? And what does the action tell you now?
Well, we're going to see consolidation, but I don't think so in these markets. I think this is just a minor blip, if you will. And we talked about this. We didn't say that you're going to see a straight up into the end, a straight melt up. You're going to see some dips. But as I've said before, and I'll say again, if you have conviction around names, this is a buying opportunity. On our desk at Loop Capital today, we are seeing institutional investors picking up, though I'm sure they'd rather be sipping their eggnog for the rest of the afternoon today. When you see pullbacks in some of these names that you have high conviction in, and for the long term you think are going to do well, you're going to pick up on those dips. And I think that's what people should do here. And so you're not seeing a tremendous shift from, out of tech and into this or that. I think you're seeing really sound buyers picking up where the market is selling off on some fears. I mean, we saw the VIX. I know this morning when I looked at it, I think the VIX was around 28 here right now, which is highest. We've seen it kind of since the beginning of November. So when you see kind of some of that fear, that is an opportunity for long-term buy and hold investors to pick up on some quality names.
Weiss, are stocks, I'm going to just ask you straight up, are stocks vulnerable at current levels, or is Tom Lee right when he says there's still a lot of gas left in the tank for a year-end rally? Who's right, Tom Lee or Oppenheimer? Because they're both not going to be right.
Well, actually, I'll take the case they can be right. There is plenty of gas left in the tank, but I don't see the Santa Claus rally happening. I don't see a January effect happening. I think we've seen that all along. Stocks should be somewhat vulnerable.
Why,
it's
though?
been looking for a catalyst.
Why?
Well,
why don't you see the Santa Claus rally happening? Is there too much already baked in? I mean, what's the story? We've been expecting one. What's
exactly
derailing
right.
it?
That's exactly right. I haven't been expecting one, but there is too much baked in already. We've seen the stocks move up too aggressively. And I think it's the kind of market where you've seen money constantly go in, and that to buy because you're hoping for an early January effect, as we've seen for the last few years, you're probably not going to get until January, until we get a new administration and the plans are laid out. So, look, the market's been looking for a catalyst to have a slight correction. Unfortunately, it wasn't the sell in the news that we saw from having the COVID relief plan come in over the weekend. So it was the new strain coming out of the UK and other places in Europe. But the viruses, including, the information I've got from reading and talking to companies, is that they can handle the new strains. Viruses, the vaccines are always constructed with a view that this is going to mutate in somewhat. Now, you don't know that for sure until they get in the petri dish, but you should feel good about it. So, in my view, sure, we could be bumpy, as Liz says. I agree 1,000%. But what I'm seeing here is what Joe's seeing. We're seeing a little bit of a rationalization of the reopened trades that didn't stand a chance of being sustainable. The cruise lines, the airlines, the hotels, and you're seeing smarter stock picking, I think, in this market. Not entirely. There's still excesses, but overall, it's a more rational market. So I'm happy to see today, frankly.